Hey there. So, have you ever looked at a company you're thinking of investing in and just wondered what's really going on under the hood? Well, today we are diving deep into the one official rulebook every public company has to show you before they can ask for your money. We're talking about the prospectus.
Think about it for a second. A company wants to sell you its stock, its bonds, a piece of its future. They know everything about their business, the good stuff, the bad stuff, and all the risky parts. But you only know what they decide to share. That's a massive information gap, right? So how on earth do you bridge it?
All right, here's the game plan for today. First, we're going to talk about why this whole thing even exists. Then, we'll get into what a prospectus actually is, before we, tear a real one apart to see what's inside. We'll also figure out who the referee is in this whole process, and, maybe most importantly, what you should be looking for to make smarter moves.
Okay, let's start at square one. This all comes down to a really simple exchange. A company needs cash to grow, and you, the investor, are looking for a place to put your money to work. The big question is, how do you connect those two things without somebody getting burned?
The real challenge here is trust. How can you confidently hand over your hard-earned cash without seeing all the cards? This is exactly where the law has to step in. It's all about creating a level playing field to make sure you're not going in blind.
And that brings us right to the main event, the prospectus. Now don't think of this as some glossy sales brochure, no. Think of it as a legally required, super detailed guidebook for you, the investor.
And the rules are incredibly specific. For example, under Israeli law, the second a company wants to offer securities to more than 35 people, boom, it is legally required to publish one of these things. It's a very clear line in the sand, no exceptions.
So what is it really? Well, in Hebrew, it's called a tashkif. It's this massive legal document that's designed to give you all the juicy details. We're talking everything from their history and financials to their future plans and all the things that could go wrong. The whole point is so you can decide if it's the right move for you.
All right, theory is one thing, but let's get our hands dirty. We're actually going to look at the prospectus from the Shemen Oil Gas offering. This way, we can see what one of these documents really looks like on the inside.
So in any offering, you've basically got three main players. First, there's the company, in this case, Shemen Oil, that needs money. Then you've got the public, that's us, the investors, who are providing the money. But look at that crucial player in the middle, the underwriters. These guys are the financial institutions that really run the show and manage the whole process.
Now, the best part is, the most critical info is right up front. The Shemen Prospectus tells you the what, the how much, and the when of the deal almost immediately. It's like the executive summary for the whole shebang.
And this, right here, gets to one of the most important things you need to understand. A prospectus is not a sales pitch. Not at all. In fact, it's kind of the opposite. The company is legally forced to tell you everything that could possibly go wrong, to warn you about all the risks before you invest a single dime.
Okay, let's jump back to those underwriters for a sec. They have a really interesting job. They're like a financial safety net. They guarantee the company will get its money by promising to buy up any shares the public doesn't want. But of course, a guarantee like that isn't free. It comes with a pretty hefty commission.
And believe me, we've just scratched the surface. A full prospectus is an absolute beast. That Shemen Oil one, it was over 250 pages long, just packed with financial data, business plans, details on management, you name it. It is designed to be completely exhaustive.
So this brings up a huge question, right? A 250-page legal document is great and all, but who's actually checking it? Who's the referee here, making sure everyone is playing by the rules?
And listen up, because this is a super important distinction. The company is responsible for making sure the information is true. The regulator, like the Israel Securities Authority, has a different job. They don't actually fact-check the numbers. Instead, they check the format. They make sure the document has all the required sections and is presented clearly.
And yeah, there's a whole process for this. The company sends in a draft. The authority goes through it with a fine-tooth comb, and they often send it back with notes, asking for more detail or better explanations. It's only after the regulator gives the final green light that the prospectus can be published and the offering can actually start.
Okay, so you've got this 250-page monster of a document sitting in front of you. Where do you even begin? Let's break down the key sections that'll help you turn all that dense information into a genuinely smart decision.
Look, while every single page is important, these are really the main chapters of the story. You have to pay close attention to the risk factors section. Are they just generic warnings, or are they specific and, frankly, a little scary? Check the financials. Is the company growing or just burning cash?
And this one's critical. Look at the use of proceeds. This tells you if your money is going to fund exciting new projects or just to pay off old debt.
At the end of the day, the prospectus is a tool. That's it. It's designed to give you a complete, totally unfiltered look inside a company before you decide to become a part owner. It gives you the data, it gives you the warnings, and it gives you the context. But the one thing it will never ever do is tell you whether to buy or sell. That final crucial step, well, that's always up to you.